Yes, sir. It's your boy B Hayes. We back with another one, guys. Before we get into it, go ahead and hit that thumbs up. If you're new around here, you already know what to do. So, AMC, GME, and other meme stocks, guys. Short sellers, you only got one last chance. You done had chance after chance after chance after chance. Just keep on looking out for you. People chances are different. We all get, different amount of chances to get it right, to get yourself together. And they is down to their last chance, guys. This is their last chance. It's heating up for them because we're only one more catalyst away from these things going crazy. Because right now, it's already at that zone again to where the manipulation can't go too much further. It's in that buy zone, that buy territory. It done came down where the dog was at. They growling, they hungry, they want it. They want to eat your shares up. And for the ones that's over leveraged, I already told you. You already know why you feeling like that. Use it as a learning lesson. Like I told you, you gotta play small. You gotta aim small. Then that way you'll miss small and you'll stay in the game. You'll stay survive long enough and able to see the real results. So you already know, guys. Let's go ahead and take a look at this because they is more scared than you believe, guys. Because they getting chance after chance and still ain't give in yet, and they see that we haven't gave in either, and they know we by ourselves. They have manipulation, market tactics, power, the money, the people that's involved with these platforms that we trading on and investing on. They got so many ties and connections that they got so much help on their side. We ain't got all that. So we out here fighting alone. But like I told you guys, that's why even though we going through all this, you may say to yourself, why is we having these crazy spikes? Why we ran up to the all-time high the way we did? Why it took them 7-8 months to get us down to this $13, $14 level, and only took us a matter of days to get back half of our all-time high, our previous all-time high. Damn near. We was at 33, 34. That's about 60, 64, 68. Well, 66, 68 if we was to double up from there. And that's pretty close to 72, which they say the all-time high. But we know for the ones that been watching like a hawk, we ran as high as $77 AMC in the pre-market. And we got back to 33, 34 in a matter of days. The reason we was able to do that is because when so much, even with, with manipulation, think about manipulation being as a form of some very, very tough, strong metal. Like I'm talking about so thick, it's looking like you like no way possible, anything could break that, not by, bending it or no type of pressure. It's like seeming impossible, right? Just like it seemed impossible for us to get out of this manipulation and go up. It sound impossible, but with so much pressure, think about buying pressure and millions of people pouring in their money into a stock or asset or security, and all that pressure just building up from all that buying and buying and buying. And eventually, it don't matter how tough the manipulation is, which is this strong piece of metal that look impossible to break. Don't matter how strong that is, guys, how tough it is, how much manipulation, how much power, how much resources. Eventually, if it's so much pressure that's going towards this piece of metal or whatever it is, this manipulation, it's going to eventually bust. It's going to explode. And that's what made the price did what it did. They didn't want it to do that. If they could have held it down, they had more resources, more power, more money to hold it down, they would have did so. But with so much money from the retail investors coming in as an army, because of all of us collectively on the same wave, on the same frequency in life, on the same, on the same level, we would be way more powerful. They wouldn't be able to control us like they being controlling us. They like this right here could turn into something way much bigger. By us coming together and doing this, we might come together and do something else. That's why they don't want it to work. It's way deeper than what you think. So anyways, guys, these people getting nervous. They definitely is nervous, and they running out of chances. And they know that. They know once this thing pops and this thing starts to run again, it ain't gonna be no coming back down, because that buying pressure and then them covering at the last minute is going to turn into something bigger than what they can even handle or bear. So right here, guys, we got Bronte Capital's fund, which has short positions in GameStop's, AMC, and other meme stocks, announced unsatisfied Q1 results. Right here, we got The capital management firm that owns short positions in GameStop and AMC, they recently outlined their long-short fund investment theses and their expected next steps after a disappointing quarter. So it's going to be even more disappointing than that if they don't decide to cover now and get out while they're, already down 5.6%. They're going to be down even more if they don't, go ahead and come up with the strategy on how they're going to exit. So right here, guys, we got right here. Recently, the fund released its quarter one performance results to investors. Although the fund did not do as badly as the global markets in general, it fell 5.9%, while the MSCI All County World Index fell 12%. The fund manager said they were dissatisfied with the quarter results. One of the main reasons behind it was the performance was a meme stock rally in March. The fund specifically made reference to its bearish GameStop position when discussing this rally. Bronte Capital believes that GameStop's valuation is ridiculous, even when one factors the modest success the company has had in reinventing itself. Fund managers commented that GME's recent financial results have been terrible and that the company market cap doubling in March was observed. Which none of that matters, guys. They'll put that out there for the ones that's weak-minded. But we know why GME is where it's at, why AMC is where it's at, why meme stocks is where it's at, and why certain stock fundamentals don't apply to certain stocks, and what your reasoning and how, especially if you're smart with getting in it and know this is like a gambling stock. We's not here because of GME or AMC's fundamental aspects of the company, how well they doing, how many tickets, how many games they selling. We not here for that. We here for price action. We here for the movement. We here to be collectively pouring our money into something, just as they do. How they don't look at fundamentals of certain stuff. They just move as a strategic move as one and put manipulation on the stock in order to collect their monetary gains. That's the same thing we did here in this instance. So don't by any means let this trick you out of your, position by them saying, oh, it's not looking good, this, that, and the third. But anyways, hard times is coming for these short sellers. Bronte Capital outlines some potential approaching catalysts for GameStops and perhaps meme stocks too. GameStop announced a stock split. They announced that previously before. It was a proposal, which is to be voted on in early June. Although a stock split theoretically adds no value to a company's fundamentals, according to Bronte Capital, not accepting the stock split adds value is a recipe for losing money. So guys, the stock split, let me tell you the benefit that GME and AMC could have from the stock split. From my point of view, from my opinion, I believe it could. Retail investors are mostly the whole foundation of this thing, guys. So that being said, it's mainly them that are buying the stock that's giving it that major pressure to run up crazy like we've been experiencing in the past a few times. So with that being said, guys, this stock split in general is going to attract millions and millions upon more investors coming to these stocks, because the ones that's not educated, which is 90% of them, they're just going to look at it as if GameStop just fell from hundreds of dollars in share price to, double digits, maybe 15, 20 bucks. They'll think it then came all the way back down, GameStop, and they're going to see that as a crazy buying opportunity, and they're going to load the boat, guys, waiting for it to go right back to a few $100s. So that's exactly what could happen there, because it's going to make the share price look way cheaper. But in actuality, all they did was, just depending on how they do the stock split, if they do a 1 in 4, 1 in 10, 1 in 20, however they do it, they will give their shareholders that's holding the stock currently, if you own 1 share of GameStop and they do a 1 for 4 stock split, they will give you 4 shares for your 1 share. But if GameStop is trading at $100 a share at the time of the stock split, they will give you 4 shares, but your shares will only be worth $25 a piece. So now you got, $25 in 4 shares, and that equals your same $100. So you didn't gain anything from the stock split, or you didn't lose anything from the stock split by being a shareholder. So you will still be, you know, have your same amount, just they gave you more quantity and lessen the value theoretically, but it'll gain more value because from the, you know, majority of the retail investors not doing their homework, they gonna just look at it as a cheap price. GameStop just failed that much, or however they look at it. So you already know, guys, that's all I got for this video. Just want to give you guys a quick update, let you guys know my thoughts and opinions on what's going on. And you already know, man, AMC is in that buy zone. So don't freak out, just chill. You already know what I told you before. Once you get to that point, put yourself in a comfortable position. So I love you guys. Add you both on Instagram at the B Hayes Show. I love you. We out, and God bless you. We gone.